Hi, I'm Josh Misk, Vice President of Investments at Invisor. This is our April 2016 market update. Well, in April, we saw markets change course from the battering that they took in the first couple of months of 2016. We're starting to see oil prices stabilize, corporate earnings are coming in stronger than expected, and there's a lot more clarity around how the Fed will roll out their rate increases in the coming year. And now the S&P 500 is starting to move back within sight of its highest levels. So in this update, I'll take a closer look at data out of emerging markets in the US that I think are really starting to drive that change in sentiment. Starting with emerging markets, signs of lower costs and structural reforms, as well as a rising middle class, have really started to draw investors back into those markets. If you look to Brazil, the effects of persistent corruption and low growth have put so much pressure on wages that it's now finally becoming a more attractive place to do business again. And in a world where economic growth is sparse, India has been expanding by over 7% a year, yet performance has been weighed down by a rising US dollar and slow progress on fiscal reforms. But as the dollar has stabilized, India has implemented new reforms which are supportive to growth while keeping the deficit in check, and the market has reacted favorably to that effort to spur growth. Now, I think one of the most underappreciated stories is the rise of the middle class in countries like China. And while manufacturing data has been pretty weak, the rising consumerism really should trump any incremental deficiencies. If we look, for example, the number of households that are expected to earn over $24,000 is expected to double by the year 2020. And we see that played out in every facet of the economy, from e-commerce to box office numbers to tourism. Chinese tourists spent over $215 billion abroad last year, which is 50% higher than the year before. And the car market has already roared past America to become the world's biggest. And that rise is driven by strong income growth and low household debts, which are at about half the level seen in America. All in all, the Chinese consumer economy is expected to grow at $2.3 trillion over the next 5 years, which in itself is larger than the entire consumer economy of Britain or Germany today. And it's definitely something that we shouldn't dismiss when we're thinking about the growing middle class in emerging markets. Now looking over to the US, I think we're seeing a shifting trend in the employment landscape where smaller businesses are driving fuller employment, and people now have the tools to bump productivity back to levels that we've seen in the past. Looking at employment, for example, since 2009, the US economy has added 13.2 million jobs to the private sector. Unemployment rate has fallen from a high of 9.5 to 5%, and new claims for unemployment benefits marked the 58th consecutive week below 300,000. And wage growth, which has remained stagnant during most of the recovery, is now starting to show signs of acceleration. And I think another shift that we're seeing is a shift in the type of employment as people see more opportunities now in small businesses and entrepreneurship rather than large public companies. People look to startups as fueling more innovation and providing more efficiencies. And we see that play out in social attention as well, as searches for how to code have surpassed searches for stock market. Searches for a crowdfunding platform called Kickstarter, which was only founded in 2009, also rivals searches for stock market. Now, the barriers to entry are tumbling down as the tools to get started are much more easily attainable. Businesses that used to be dominated by a few large players can now have many small participants, and those examples are all around us. You know, just look to the Ubers and the Airbnbs and the Squares as examples. So, in conclusion, you know, I think we're in this period where the global consumer market is growing and has a lot of potential to grow, and the business environment itself, I think, is changing. And as the market digests that change to the positive sentiment from all that negative headline risk that we've seen as of late, I think it breeds an environment for more volatility. So it's just case in point as to why we recommend holding a diversified portfolio. You know, it's going to be able to help you mitigate those risks as you navigate through those waters. So that's it for our April 2016 market update. Thanks for watching, and we'll see you next month.